Thanks, Lakshmi. Hello, everybody. Trust you're enjoying being on this amazing Finacle conclave so far. My name is Dennis Gada. I'm the Senior Vice President and Head of Financial Services US at Infosys. And it's my pleasure to host this panel discussion with our esteemed panelists here today, whom I'll introduce shortly. I think just to set an overall context for the session, as we all know, the retail banking sector is really facing some, complex challenges as well as interesting opportunities, all created by this pandemic that we are all living through. If you look back at 2020, on one hand, I feel banks have to be really proud of what was accomplished. I was talking to some banks, and they said that the last 10 months more was delivered than probably in a decade in some cases, right? The pace of change, the velocity of change was truly outstanding. But what we also see is that banks have already on this wave of digital transformation, but it has to be done even faster now, and the expectations have changed as end retail consumers. Their experiences are very different. We are now buying more groceries online. We're doing online schooling for our kids. We are doing telemedicine. We are ordering food online, and all of that means that banks which were already on the digital highway probably need to go even faster. And in some cases, the volume, whether it's the calls that you get or the loans that you need to process, has gone up significantly, and the business really needs to cope up with that. So I think that's what we want to discuss today. 2020 is behind us. We are still, facing some of the challenges related to pandemic, hoping for the vaccine rollouts to be successful and things to get back to some kind of a next normal going forward. And how do we deal with that? So we want to talk about, what does purposeful digital transformation mean for the banks? What are the larger objectives to be achieved? And for that, I have really a great panel here today, leaders from three progressive financial institutions. I'll briefly introduce them now, and then as we start the panel, I would love for them to talk a little bit in more detail about their background, their role, and the institutions they represent. So we have Ken Ferrugia. He's the Chief Business Development Officer at Bank of Valletta. James Smith, Director of Digital at Nationwide Building Society, and Rudy, the CEO of CKV Bank. So thanks again, Ken, James, and Rudy for joining us. Look forward to a very exciting discussion. And we are all, in different cities. The good thing about the pandemic is we're able to come together virtually and have this discussion. I'm really excited about that. So let me start with you, Ken. 2020, as I mentioned, a lot of disruption happened, but I think all of us learned a lot from it as well of what is possible. And most firms I speak to have kind of renewed their strategy for the future. So it'd be good to hear from you what you see are the emerging trends for 2021 and beyond, and also share a bit of your background and role at Bank of Valletta. Over to you, Ken.
Thank you, Dennis, and I'd like to thank Infosys for inviting me for this panel discussion. Clearly a very topical theme to touch on. I'm Ken Ferrugia. I'm Chief Business Development Officer at Bank of Valletta, which is the largest bank in Malta. I've been in banking for now 3.5 decades. It's easier saying 3.5 than 35 years because it's a long span of time. And I've worked in different areas within the bank. I sit on the executive committee of the group and on the group's subsidiary companies. Intrinsically, my responsibilities span, the retail banking sector of the bank, and the asset management and wealth management business of the bank, to include its asset servicing subsidiaries. And undoubtedly, because of the customer-facing nature of the responsibilities that I take care of, obviously the pandemic has had an impact. I'd say a three-pronged impact. It has an impact. It has had an impact on the business side. It has had an impact on operations as well. And clearly, I think like any other business, not just in financial services, but in non-financial services, they've had to come up with different operational models to sustain the business. But it has had an impact as well on customer preferences, right? And we've seen the impact on this pandemic insofar as the way that customers want to engage with the bank and what products and services they today are utilizing, which are somewhat distinct when you look at the patterns of products and service take up than they used to be attuned to in the past. I think insofar as the business is concerned, undoubtedly, the impact of this pandemic has brought about heightened sensitivity around the way that we service customers. And, we've put in place, we have 40 branches across Malta and Gozo, the sister island. We've put in place sanitizers, screens, provided face masks to our staff members, controlled the footfall in the branches to minimize as much as possible having a lot of clients in the traditional client area of our branch network. So it brought about a significant change in the way we interact with customers, try to shift customer engagement to digital. Was not easy in the beginning. I think the rush for laptops by many institutions was very, very evident because most staff members, used to work with desktops. So the shift for the shift to laptops and to find laptops actually, which was a challenge to a degree, because obviously there were a number of operators supplying and vendors supplying laptops that had to shut down because of the pandemic. Ensuring that you prioritize cybersecurity in the process, because clearly working remotely does create cybersecurity issues which need to be catered for. So, undoubtedly, from a business perspective, in terms of engaging with customers and the way you enable your staff, to service clients, whether they are working remotely from home or whether they are at the office, and managing in the process the impact of infected staff persons because their relatives were infected or because they were infected, or the onset of having, and I can relate some experience having security guards that we have within the network that were infected as well, or having customers walking in and in a branch, and it turns out that they were infected with the COVID. So contact tracing comes in, and then you have to put in place protocols so far as fumigating branches or offices and quarantining staff. So it was clearly a challenging environment, which required, three things: the ability to adapt in an agile manner. And it's the 3A model that I use for such incidents, whereby you have to quickly move to adapt your business, your operational model, to ensure that you sustain the business of the bank. Undoubtedly, I think there are positive outcomes, however, because I think the tragedy of this pandemic is the extent of death that it has caused and the health impacts, which are still, I think, unknown as to whether they will have a long-lasting effect on those that were infected. But I think there are positive outcomes. Undoubtedly, looking back at my 35 years of banking history, the traction we've seen in transaction migration, right, from traditional over-the-counter transactions, with cash withdrawals and check encashment and check issuance, to digital channels, and the use of internet banking, the use of mobile banking, the use of digital wallets, the use of cards, more so the use of contactless cards, has accelerated dramatically. And I think it gave the banks, we introduced, for example, a minimum cash withdrawal of 500 euros from across the counters, right, to minimize the footfall of branches, of customers going to branches and withdrawing small amounts, right? So shifting customers to the use of ATMs. And it's amazing. Even the handling of cash and the handling of checks, which was perceived as possibly a threat to being infected, we saw a big shift by companies to process payments via internet banking rather than via the issuance of checks to pay suppliers, right, or to pay employees with checks, because there was still that custom with some operators, particularly in the small to medium to micro business segments. I can tell you, I mean, we've reduced check issuance by 50% in 12 months, right?
Wow.
So it's impressive the traction with which this pandemic has really induced the adoption of channels and of products or services which in themselves, from a cost to serve perspective, are very beneficial for banks, right? Because the cost to serve customers is clearly much cheaper when you shift customers to transact, to self-service their requirements through digital channels. So, I think these are long-lasting impacts, and I don't see these going back or change at all. To the contrary, I think it will, the adoption of these channels, of these products, will increase going forward, because I think the customer experience around them is positive, undoubtedly. And for people that were used to the legacy means of withdrawing cash from ATMs or issuing checks, when they start to experience the comfort, the ease of using their cards, of using their mobile to pay for goods and services, of processing on a 24/7 access to internet banking, payments, or inquiring for balances rather than go to the branch, that will not change. These are long-lasting, in my view, impacts on customers and on banks alike. Lastly, this will clearly drive, I think, a lower footfall of customers to a branch.
Yeah.
There was clearly customers that have become now more comfortable using these channels will say, why do I need to go to a branch? So here again, the banks need to reinvent the way they engage with customers, right? In a non-face-to-face manner. And I think their digital strategies in engaging with customers, the use of digital channels of internet banking, mobile banking, and the customer experience and user experience within that will become critical, I think, in the strategy of banking and financial institutions going forward.
So to build further on this, let me ask James, right, that not surprisingly, there are some organizations that were already ahead in the digital journey, and that they managed to handle, the outcome of the pandemic much better, and they went forward even more. And I think, your firm is probably one of those organizations. So it'd be good to, get your perspective as well, right? Medium to long term, what do you see will be the focus areas, and how at Nationwide Building Society you've been on the digital journey?
Okay, thank you. Right, and so first of all, thank you for inviting me along. Secondly, it was really interesting to hear what Ken had to say, because different country, different organization, but much of what he said is fully resonates with me. So I guess just a bit of context then. So in terms of Nationwide Building Society as an organization, it's a building society. It's a mutual. It looks and feels a lot like a bank. We sell mortgages and savings and current accounts, but we are a member-owned organization, so we don't have any shareholders, and that provides a slightly different dynamic. In terms of size, we've got about 16 million members, and of which we've got about 7 or 8 million are current accounts, and about 60+% of those folks are digitally active in some way. I guess that just provides a bit of context around how this last year has been. I guess just, and then from a branch perspective, because again, Ken talks about the branches, we've got a fairly large branch estate still, so we've got about 700 odd branches, and clearly that has been felt across that. If I then think about, so I guess in terms of my role, so I guess usefully, given the question, I've had kind of two hats really in the last year. So I'm Director of Digital. So I look after digital for the society. I'm accountable for all sales and service across all of our products in a digital context. And then for the last year, then I have, alongside a colleague, co-ran the incident that has kind of ebbed and flowed a bit in terms of its intensity. That was the organizational response to COVID. So everything from, again, I sort of smiled, everything from how do we source laptops through to what do we do in branches, through to how do we provide some level of certainty and surety to our staff that they're operating in a COVID safe environment, all kind of came through me or a colleague. So I guess I've got some visibility in this. In terms of then a perspective on digital and effectiveness of response, yeah. So broadly, I agree with the sort of the idea of that question. The key thing that organizations that in general are good at delivering digital change have got agility. That's the thing that they tend to have and they have agility of systems, of processes, of decision making. Mm-hmm. And if I think about how, yeah, we're not perfect, right? But we've made some pretty good gains in the last few years. If I think about how we deployed that in this context, probably three things that I would bring out. So the first of all was, through all of this, you need to make sure that, or we needed to make sure that we kept a real focus on what was ultimately important. Because it's very easy when you're in the mire of a busy environment to kind of lose focus, but keeping that real focus on the member was absolutely key, or customers, members we call them. Mm-hmm. The second thing was to make sure that we have then a really effective means of prioritizing the in-year demand, because again, the propensity with which organizations could wildly veer from side to side, and at the end of 12 months look back and done nothing other than manage the response. There was a material risk. And then finally was then make sure that you're really alive to the in the moment things, because inevitably there are in the moment things. And I guess a couple of sort of proof points. So what did we do? We didn't have any concept of a contact center at home. All of our contact center was in an office in the UK in 3 or 4 different locations. Over the space of a couple of weeks, we set up and issued hundreds of laptops and enabled our staff to work from home taking calls. That materially improved our ability to handle inbound customer queries, because at the same time, and again, Ken talked about the tragedy of this, like there is definitely a human tragedy in terms of the illness off the back of it. The other tragedy is the real economic hardship that's going to come off the back of this. That we will be working through for some years to come, but has been really manifest over the last 12 months. So that's one example. And the other example would be in the UK, I suspect it would be the same across the board. There was quite a lot of regulatory intervention in terms of allowing for forbearance of loans. Using the digital processes that we've got set up, we were able to create a mortgage payment holiday process, define it, code it, put it live within 7 days. That took about 250,000 requests. We simply could not have dealt with that over the phone. We wouldn't have been able to, even if we could, we wouldn't have been able to find enough people to handle the phone calls to manage that. And if you think about the other end of that, that's some member who's maybe lost their job or lost some certainty of income, is just looking for a break. And that's when digital can make a real difference.
Yeah.
Fully agree.
So that's a great point. Rudy, why don't you add to that and also give a little bit of your background, but go ahead.
I'm Rudy. I'm now the CEO of a very small niche playing bank all over Europe, in Belgium, one of the smallest countries in Europe for the moment. I'm an ex-ING guy, so I'm coming from a multinational institution. I thank you for inviting me, Dennis, and I'm also very pleased to hear Kenneth, which is also like me. Sorry, Kenneth, an old-timer in banking, so we have a lot of experience. And James, you're of course more intelligent than ours. You're younger, but you have a lot of experience as well. What did we found in our banking environment in Belgium? And that's something I would like to share with you, and you can challenge me. We saw a lot of people who having fear. They were afraid. They were very shocked by the virus, and they were afraid of the death and all kind of things. And so we had a lot of to put a lot of energy in the human factor of banking. So first of all, we needed to convince our people that at the bank they are safe or they could work at home. So we did a fluent system of working hours, so they could work between 7 to 7, even the weekends, and they could work at home if they would like to work at home. we were already prepared, James. We already had a PC and all kind of things, so everybody was able to work from home, and they did so as well. And we, in our committee, we decided to put energy on 2 points. It was digitalization, and there we had a positive influence of the COVID, that a lot of aversion against digitalization went away. Everybody saw the advantages of digitalization and even of procedures. Before, there was a lot of reluctance in Belgium and Europe against rules and digitalization. Now, thanks to COVID, sorry to put it that way, we saw that a lot of aversion went away and people embarrassed the digitalization, embarrassed procedures. We had a lot of procedures which showed them how they could work from home and how they should work from home. And this was a big advantage. Regarding to that, we saw that the fear was really in the market. So a lot of, I don't know how it's in your countries, but a lot of Belgians were afraid to put money out of their pocket. So we saw a lot of demands in insurance and in banking to save products, simple, safe products, because they were afraid. So they didn't spend money, which they should do normally, but they didn't spend money. They kept the money on the saving accounts. So we saw a lot of increase in saving accounts, and we tried to put there some insurance products to work on the fear that was in the population and the people. So we really, from a strategic point of view, we invested, and that was a good thing so far, which we see in the figures, on humans, on the fear, and we invested a lot on digitalization and on the sales force. So we kept 2 things in place, the sales force and the digitalization. The other points of strategy in the banking, we have put down a little bit, like Kenneth said and like James said. But we were more, a little bit different than you are. We were on the hybrid side. So we did digital what we could, but we tried also, when it was possible, in a corona safe environment, to have contact with people. So when it was allowed, when the people were safe and they were afraid, we tried to have a hybrid, like a hybrid energy, a hybrid model, less than a fully digitalized model. We had a hybrid model put in place.
Yeah, so that's a great insight, and that was actually the point I also wanted to bring out, right? So one is even, and to share a perspective from the US, the government here also launched, the small business paycheck protection program, and that was meant to serve the small businesses, right, the communities. And while there were a lot of the large banks that gave out those loans, if you actually see the top banks, there were a lot of the local regional banks that were able to use those funds to support the small businesses. And in fact, again, one of the banks said that they did more loans in those 4 to 6 weeks than they have done in the last 20 years of their existence.
Exactly,
right? So
exactly, fully agree.
To the economy. But my question, maybe to build on what you said, Udi, Ken, to you again, is, as the things come back, and let's hope, second half of this year at least, things really start to get better. How do you think the physical and the digital world will kind of coexist, right? Will we go back to exactly the way it was before the pandemic? Probably not. But how will this hybrid world work in your branches and in your other business processes?
I think we will not return to as it was before. I think certainly, like Kenneth said and James said, I think we will have a new normal. How this new normal will look through, that will depend on each country. I also think that something was not highlighted so far, is that in Belgium at least, and in European regulation, we needed to postpone and to give a lot of oxygen to companies, which we approve, because we are, as banking, this time we are not the originator of the crisis, Kenneth, but we were in the crisis. And so we need to put, we would like to help the people to get through. And so, but I see a lot of banks at the moment who are already suffering in their own business model, because in the rules that we had, and you mentioned it, holidays and carence period, and we love to do that. But I see a lot of banks, and even myself, my own bank, we have to postpone a lot of interest payments which were foreseen for this year to next year. They are not waived anyway, but as you know, we didn't receive a lot of interest payment which we had foreseen in the beginning of the year. The costs, of course, they are not postponed to the next year. They are in this year. So a lot of banks, and that's something I would like to mention, is they need to have a profitable business model. So we don't need to go too far, and we need to have a minimum viable product, Dennis. And as you said, I don't think we will go back to a full digital world. I think the general and the big banks will do that probably. I'm a niche playing bank, I'm a small bank. So I think we will stay for the hybrid way, but I have seen in the back office and the middle office that the digitalization will never return. Will remain. We will not go back to the early years. We have AI, we have robotical technology, we have speeded up. In the front, that's my niche playing bank, we will still take time to see people. If it's possible, if it's allowed, but of course, the next stage will be digital. It will no way of returning in my point of view. And I hope that that once the vaccination process is finished, that we will return, and it's already mentioned in the press, to the roaring 20s. And I hope people will spend money, because in Belgium we have too much money on the saving accounts, which is not in the real economy, and so on and so on. So I hope that they will spend money and that inflation will go up and so on, and that we get a better structure in the future. So, Dennis, go ahead.
That makes a lot of sense, Uri. In fact, my point was that you will certainly want to see your clients more again in the future, but maybe the format will change, right? Rather than clients walking into the branches, there will be more video discussions.
I don't believe in branches. I think branches are dead. Sorry, I will put it very
to
Kenneth and to James. I think branches are dead. I don't believe it. I think some branches, but I don't believe in branches. That's
Ken, you want to respond to that on branches?
I can.
Sorry.
Absolutely. No, I can. I think the move towards phygital strategies, where the physical branches will coexist with digital branches for established banks, rather than the sort of the banks entering the fray today, particularly these digital only banks, will still remain. And I can tell you that there are customers, most likely not in the millennial or in the Gen Zers clusters, but the baby boomers that still prefer the face-to-face, still prefer the ambience of a branch. And I can tell you there are some well-established banks that have rethought branch layouts, branch formats, introduced cafeterias in branches. So they're being really creative in creating client engagement opportunities within the public footprint of a branch, right? So I think the traditional branch will definitely not remain, but definitely I think the use, particularly in Malta, which is an island, right, where the proximity of a branch is within really sometimes walking distance, right, from main residential areas, it will still be the preferred location for customers to engage with their relationship officers or their universal bankers, as we call them. So they will coexist. Undoubtedly, I think for the ease to execute transactions, we will see traction in the digital channels. So if you want to make a payment, you will not go to a branch to make a payment, but you will use your digital channels to do so. But if you want to discuss your financial planning requirements, your pension planning requirements, I think most likely that persons would, I think, accommodate and welcome engagement through a virtual channel, but nothing beats a face-to-face, I tell you. And this, I think we're all experiencing it in meetings, right? So it's easy to conduct a meeting or to conduct conferences or webinars via these virtual channels. but nothing beats being in a physical location, in a conference, meeting people face to face, handshaking people, right? Nothing beats that, right? I don't think that will ever change. I think that will still be the preference channel.
Sure, Ken.
Yes, if
And,
I mean, just on the,
yeah, go ahead, James.
since we're there on branches, I said we mentioned we've got about 700 branches. So I guess just a couple of perspectives. First is that what the last 12 months has, I think, enabled is us to create a sort of a different philosophy around a branch. You know, like historically, branch front office, contact center middle office, and then back office. In reality, what we've got is 700 locations, secure locations around the country where people can work. And they've all got now laptops, right? And they've all necessarily had to get skilled in lots of different things. So if historically we had all of our electronic interactions, so secure emails and what have you, went into a team centrally whose job it was to process that, well, we don't do that anymore. That's now work that's consumed by folks who are working in the branches when they are not busy doing other things. And it's allowed us to fundamentally rethink how work gets done. So suddenly the distinction between branches and not branches becomes less important. I guess the first point. Second point is, especially, and I don't know these guys' businesses so well, obviously, but you know, we operate a mass market proposition here, 16 million members. We have everybody in there, from people who would rather, you know, spend all their time online and wouldn't think of going to a branch, to people who utterly rely upon it for reasons of reassurance or even community. And we need to cater for everybody in that spectrum. And so therefore, I think there is absolutely a role for the concept of a branch. And then finally, I think what I'd say is, if the last year has taught me anything, that if you're in the business of predicting the future, it's a really tough gig. Yeah, we're in. So I'm in England. We're now in our third really major lockdown. If 12 months ago you'd said, "Yeah, will you have lived through?"
Nobody would have lived.
Yeah, I mean, I wouldn't. Like, I had no concept of what even that meant. And so, looking forward, I think it's a really tough gig, and never ever underestimate the emotional attachment that people have to their money, and the importance, therefore, of that human relationship for everything from investment planning and pensions, what have you, through to death of a loved one, or getting a divorce, or you got into financial difficulties. So I think we will need to keep this constantly under review. Is my broad point.
Yeah, absolutely. And I think the role of the human connect is important, but maybe the role of, let's say, somebody who's picking up the phone at the contact center, or the teller in the branch, or the relationship manager, to your point, James, that is all getting merged, right? Because everybody is working virtually off a laptop and a phone, and the contact center agent can also provide some ideas or advice and so on. So it's really merging of different roles, as long as you have access to the customer information and can provide the solutions. I wanted to maybe talk a little bit about, what new opportunities this has created, and maybe new competition as well, right? Given that banks have, managed to, kind of support the retail customers through this pandemic, but there have been other institutions, a lot of the fintechs that have been, waiting in the wings for some time, and some of the offerings that they have, especially digital payments, some kind of lending, and so on, those have really taken off, right? So, for example, in markets like India, some of the digital payment companies like Paytm, their number of subscribers, volumes, etc., has completely skyrocketed. And you see even the larger companies making moves. Just a few days back, recently, Walmart made an announcement that they are getting into the fintech space, and they'll partner with Robinhood to set up something. So how do you see that impacting, right? Is that new competition? Is that going to be more of collaboration of some of these firms actually working with the established banks to offer some very pointed solutions and services? Would love to get your perspective on that. James, maybe
I don't think this is This is a recent phenomenon. I mean, clearly over these last 10 years, the onset of technology companies entering the financial services domains has been very, very evident. And we've seen quite a number of digital-only banks. We've seen them in the UK and in other markets. You mentioned India, entering the universe of operators in the financial services space. And this is the battle between fintechs and tech fins, right? Because I consider fintechs to be the financial services companies of today that are trying to accelerate their investment in technology, to ensure that they have solid propositions, to cater for those clients that want to service their banking and financial requirements through digital channels. And then we have what I call tech fins. And these are the technology companies that are seeing opportunities to better service customers that sometimes are monoline, so they're focusing on maybe lending or just payment. And they come up with very solid, robust propositions for the marketplace, right? So it's a battle between traditional financial services companies that are trying to accelerate their investment, their spend in technology, because they've been so far, I think, very lethargic in doing so. And if you look at many research reports carried out on the banking sector, the banks over these last 10, 15 years have really massively underinvested in their technological platforms to service, the millennials, the Gen Zers of this world, right? On the other hand, you see these technology companies that are seeing opportunities to service these customer cohorts and coming with excellent really propositions in the way you apply for a loan as against the traditional over-the-counter in a branch, and with the paperwork that comes with that, with really getting a reply, a quote online, in minutes, right?
In minutes,
and the money in your account within 24 hours, right?
Yeah, even in the United States, 15 minutes, Kenneth. 15 minutes.
Absolutely. Even
That's
customer onboarding.
Incredible. Yeah.
Nonetheless, there are some realities which are now being reconciled, and these are regulatory realities. And we're seeing some of these technology companies now that are realizing, as they broaden their service proposition to customers and entering into investments and into the wealth arena and into the insurance arena, that there are heavy regulations that banks have obviously been accustomed to for a long time, particularly with the re-regulation that has taken place in these last 10 to 15 years.
Incredible.
And undoubtedly, this is a new reality because clearly technology companies are not used to this form of regulation. Truth be told, RegTech can be utilized to manage technology, to manage regulatory obligations. And clearly, I'm sure that as is happening today, that they are developing technology platforms to handle their regulatory obligations. I think, however, one important point, and this is my reading of the state of play today, that if I look at, say, Malta, right? We've had the entry of a payment service provider. I will not mention the name, but it made significant inroads in the markets and in the payment space because the ease of use of the app for payment purposes, the transfer between accounts. Nonetheless, when you speak with customers and when you talk about the word trust, will you trust all your wealth with these digital-only providers, payment providers? Or will you simply shift some money to satisfy the ease of executing a payment? And I think this is the gap between technology companies entering financial services and the banks that have had the trust of their clients for many, many decades, right? And I think this is giving rise to what I call co-opetition. It's the cooperation between competitors. And this is where we're seeing banks accelerating their entry in the digital technology space by acquiring these technology companies, acquiring their propositions, using OTBX to interface their platforms and service their customers. So it's really, if you look at it from that angle, from a bird's eye view, it's a win-win situation, right? And today I know many banks like us that are holding discussions with these technology companies that have developed fantastic apps, fantastic UX, fantastic frictionless customer experience, and really integrating them and white labeling them within their service propositions. And it is, I think, this for the banking sector, this is, I think, a boon, if I may use that word, because it enables you to give the best of breed to customers, right? Because you're also seeing in what way you can satisfy customer requirements in an efficient and a frictionless manner. And I think the fact that we've seen these technology companies grow in numbers should not scare banks. I think there is scope for these technology companies to look at banks as partners, as business partners, and servicing customers. Moving them from legacy ways of executing transactions to digital-enabled ways, which I think is a better customer experience. So that's my reading of it, and I think it's beneficial for banks. It's beneficial for technology companies as well.
Yeah, I agree. I think there is space for everybody, and it will only help accelerate, what banks are already trying to do. Maybe James or Rudy, you want to add any points to this?
Well, I guess first of all, it's a very comprehensive answer. I agree with I think pretty much all of it. I guess just as a couple of other thoughts, really. So first thing is, there are some hard commercial realities that will need to be faced into. So again, I'm not so hot on the Belgian and Maltese market, but on the presumption that most income, if you're a bank, comes from net interest margin, and
absolutely, James, absolutely.
Yeah, we've got bank base rates of 0.1% now, so these are historically low. Like you go back 5,000 years to ancient Mesopotamia since the last time rates were that low. That's a tough environment to make money.
It's a long time ago, but you're right.
Just restarted work, I think. Is that right? I think according to anyway.
Sorry.
If you are if you're looking to make money in banking, that's a tough place to go. It needs a big balance sheet and it needs an efficient operation. So and there is a danger that some could interpret that as me being complacent. I'm not. I think in the UK it's really keen competition. Some really fantastic propositions. They have stimulated a level of energy and imagination in retail banking that I haven't seen in the 20 odd years that I've been working in it. But that is stuff that we can benefit from being a large established player, either to directly compete with toe to toe, and we are, okay, or collaborate with to take advantage of and work with for the benefits of both organizations and the member or the customer as well. And I just think that this can often be painted as these laggard banks, will never be able to get there. Banks for the most part are full of smart, motivated people. So I wouldn't put all of my money on the other being a foregone conclusion.
Yeah. But maybe I'll just, challenge it with an example, right? And Rudy, would love to get your views from how to use data and so on to build products and services. But I would say, maybe nobody expected Tesla in the auto industry to do what they are doing now, right? And still, right, they don't sell as many cars as their competitors do. But the hope is that, they'll do really well, which is reflected in their market capitalization today. But it's it's a software company and a data company which makes cars. So do you think something like that, Rudy, would happen in banking, and how even if not that, how are you and your other peer banks using data more and more to serve customers?
Yeah. This is really one of the key questions that we didn't talk about, Kenneth nor James, so far. I think if banks are working together with Google Pay and all kind of things, that there is a big danger that banking society will lose not only the payment systems, the PSD2 and the PSD1, and maybe in the future the PSD3 regulation. I think that's not the issue. I think really that the issue will be that if we lose the payments, and we will lose the payments in my point of view, then we lose not only the payments, but we lose the data of the payments. Because if we see the accounts, and if we can see of what is James buying in the supermarket, and what he is eating and what he is drinking, even Kenneth, he's a bit cashed, but this information, this is big data. And if you see that Deutsche Bank is working together with Google, and everybody between us here are specialists, we know how many transactions Deutsche Bank is doing day to day. And if Google is able to analyze those data, then we as small or medium banks, we will have to pay to get those data, because those data are very important to serve our clients to be before everything happens. Because what do we really want as banks is to give information to a client, individual client, on his IP address, which is information for him before he is doing something. So we could be able, I see you have a problem in repayment of your loan. Don't worry, come to us. We can give you a holiday. We can help you to solve the problem. So I think really big data will be the future. So in my point of view, what is I am trying as a small bank, and I think that's the only way to survive, Kenneth and James, please tackle me, is that we are building a system that can talk to everybody. So I think as a small bank, we need to be able to talk on a intelligent digital way with each platform in the world. If it's Google, then it's platform Google. I need to pay probably for the data, but I want to have a digital platform that can talk to everybody else. And I think that's the future of banking. And I think technology is one thing, but technology as a standalone factor like we did is not enough to create a banking relationship. So I agree with Kenneth and with James that we need to have some kind of, not branches or brokers or what, anyway, we need to have some system to have a connection, a trust relationship with our clients in the future. And I think one thing that we should see is, and I'm a bit frustrated about regulation, Dennis, because banking is very regulated, and we know that as well. And what do I see? 70% of banking is not regulated. 70% of banking is not regulated. And so the fintechs are having a gap into the regulation, and they use it, and they are much more quickly than we are on strengthening their roots, and they have very, very, very fast systems. So what do? I work together with a fintech company in Berlin. I work together with fintech companies all over Europe, because they are more fast than myself, and I work together with them. I try to use them for my own benefit and profit. Sorry to put it that crude way, but that's the way we are doing it for the future. And I believe that's the only way to, as a small bank, to survive in the future. Please challenge me. Please challenge me. Please challenge me.
You're 100% correct, Rudy. If I may add to that, I think today it's standard that on executive committees of banks, you find chief digital officers, which are responsible for the digital strategy of the banks, which, as I said earlier, interfacing with best of breed, technology companies that have solid propositions that are finding it difficult to acquire customer trust, because that is always a big challenge, right? Moving from your traditional bank where you've had a relationship for donkey years. And I'm talking particularly and especially for baby boomers, but they do influence as well, millennials and Gen Zers, so they, as I did with my sons, you open bank accounts for your sons with the bank that you bank with. It's normal, right? It's what we always do, right? But they do the adoption of third-party platforms is easier for millennials and Gen Zers, undoubtedly. And we've seen that when you look at the age profile of clients taking up these third-party propositions. But as I said earlier, the presence of chief digital officers, of data science teams within the bank, of the use of big data, AI, machine learning, even blockchain today within banking, it's not just to ensure that you are and you remain relevant, because I think that is the biggest challenge for the incumbents, right? It's ensuring that you remain relevant to your customers. Right?
Exactly.
And if that means teaming up with technology companies to do that, that's what the banks are doing today, right? I mean, teaming up with competitors in the marketplace. And I said, I firmly believe it's a win-win. We've had one ourselves as a banking group, and, putting that proposition on the table for customers. And, this is what customers expect from us, right? I mean, the last thing you would want from your own client is criticizing you for not delivering a functionality which is easily available out there, right?
Exactly.
Right.
Thank you.
Yeah, no, so again, fully agree. I think what is data? Data is it's a means of relationship. Yeah, again, go back, make it easy. Go back 50 years. Data at that point was what was in the branch manager's head in the local branch. He knew the individual.
I fully agree. But yeah,
and big data was contained in, the grey matter in the branch manager. Like, that's no longer a thing. Therefore, how do you create that same level of insights in order to be able to drive relationship, to drive relevance? Well, you need data. Where is that data? It is everywhere. It's on these things. It's with 100%. And the people that can, gathering the data is in some respects the easy bit. Getting value from it is tough.
It's tough. And to link it to the individual on the IP address is really a big thing.
Yeah, and the
if you can do that combination, that's really the aim to get to.
And the responsibility that comes with it. So again, speaking of regulation, like GDPR, actually, an entirely sensible set of rules, right? That broadly says, people need to take an awful lot more care around data. But the cost that comes with that and the responsibility, it's not to be taken lightly. So yeah, I guess I agree. It's a very long way of saying that.
No, amazing. So this has been, really fascinating insights on all parameters, right? How all of you kind of in your institutions manage the pandemic situation, the partnerships that you're thinking about with third parties, the leverage of data. I'm sure the audience will gain some great insights from this. Before we end, I wanted to do maybe a very short, rapid fire round on getting to know you better on the personal side as well. And maybe if you can tell us just very shortly, right, like one thing that you did differently, either in your personal life or work life during the pandemic, and that will help us know a little bit more of you. So maybe I'll start with you, Rudy.
You should ask my wife. She complained that I was never at home before COVID, and now I'm always at home, and she's complaining. So I don't know if it's familiar for my colleagues, but that was really a big issue. And if I be more serious, Dennis, I did a lot of walking, much more than before. Yeah.
That's great. Ken?
Definitely, I think working from home was a bit of a novelty for me. Because I've always day in, day out in my 35 years of career in the bank.
Yeah, Kenneth, yeah.
And I don't think I will go back, actually. So sort of, working partly from home and working from the office strikes a nice balance as well, right? Because
exactly,
you get to bump into your family members, because I have two sons that were, one of them is at university studying, so he was working from home, he was studying from home, and the other one was working from home because they were alternating between office and home. So you get to meet your family members much more frequently, ironically, and I think what this has given me is more family time, right? So if I look back at these last 12 months, definitely I've enjoyed more family time and being around my family members, than I used absolutely doing so beforehand.
Thank you, Ken. James?
Listen, a lot of that resonates. Our dog has never had so many walks. Like, speak to her now, she kind of looks at you like, not again. Because in the most stringent lockdown, taking the dog out was one of the few things that you could do that was not.
I did it, yeah.
I don't know. This is a slightly more kind of sort of philosophical thing. Is I think that I've realised how many things previously that I took for granted without even really thinking about it. From the basics of right now, we've got no holidays planned this year because
me neither.
And it just, we didn't even think about that before, or seeing friends or family, and I think I don't know, like there's a bit of introspection and thinking about quite how pervasive a change this has had and how you want to be going forward, which is, there you go, it's a bit deep and meaningful, isn't it? But there you go, that was my little reflection.
No, that's amazing. And for me as well, in my role, is to
Yeah.
travel 3 to 4 days a week, right, within the US and globally, and not having to do that kind of a travel, especially not spending time, for example, on with delayed flights on LaGuardia Airport. I think that's a blessing.
That's a blessing. I would say, Dennis, that's a blessing. That. Sorry.
No, absolutely. No, so great. Again, thank you very much, to all the panelists, Ken, James, and Rudy. Fascinating discussion, great insights. You've done really well in your respective firms, and I'm sure the audience has some great takeaways for them to reflect upon and see how they can do more on this digital transformation journey. Everybody is on it. It's a question of, how do you maneuver, how do you move faster, and how do you make sure that whatever you do is benefiting your end customers. So with that, goodbye, everybody. Stay safe, and over to you, Lakshmi.